Policy provisions.
I'm glad that you took the time to meet me and discuss the provisions of my policy.
The entire contract provision specifies that the contract is made up of the application form, endorsements, and the policy which contains the provisions. Application form. The application form contains the basic details about the insured and/or owner and the information about his or her condition. It forms part of the contract because it is the basis for the acceptance of the risk of the insured. Endorsement. Endorsements are additional provisions such as rider provisions, settlement options, and others. Policy. The policy is made up of the basic provisions required by the Insurance Commission that specifies the legal responsibility and obligation of the insurer.
When does my policy become effective?
The contract becomes effective upon approval and delivery of the policy, during the lifetime and good health of the insured while the policy is in force, and upon payment of the first premium in advance.
What if I fail to pay premiums?
The grace period provision allows the insured to settle payment within 30 days from the time the premiums became due. When death occurs while the grace period is in force, full benefits of the plan will be paid. However, after the grace period and the insured died, no benefits will be payable. This provision specifies a minimum of 30 days. However, life insurance companies have the option to extend the grace period to 45 days, 60 days, or to a period it deems necessary for as long as it will benefit the public. Life insurance companies are not allowed to lower the 30 days grace period because it will be detrimental to the insuring public. Some insured clients choose to have the automatic premium loan in force after the grace period. Premiums will be paid by the company deducted from the cash values of the policy. However, this will be considered as a loan and would have to be charged interest for it. Any time after a cash value is available and the policy is in force other than as extended term insurance, the insured can obtain a loan for an amount not exceeding the cash value. This may be availed of in case of dire emergencies. There is no definite repayment date for the loan. However, interest will be incurred. Upon payment of benefits, any outstanding loan will be deducted from the total proceeds.
Can I assign my policy to the bank where I have a loan?
A life insurance policy may be assigned by the insured to another party. This may be done by executing a deed of assignment which is duly notarized. The company assumes no responsibility for the validity or effect of any assignment. A policy may be assigned to a bank as collateral to a loan. By doing so, if the client dies, the bank will have priority over the beneficiaries to receive the proceeds equivalent to the amount of obligation or loan of the insured. The beneficiaries will only receive any excess amount after the loan is paid. In some cases, a policy may also be assigned absolutely. This is the complete transfer of all rights to another person. An example of this arrangement is Keyman Insurance, being transferred to an incoming officer.
Could there be instances wherein benefits payable are questioned or adjusted?
The insurer can question or adjust benefits payable, like in the case of misstatement of age. It will be computed based on the amount which the premium would have purchased at the correct age. Applicable risk class and applicable premium rates as of the policy date. The client's face amount is 500,000 pesos, with premium of 45,000 pesos. However, if it will be based on his correct age, he should have paid 50,000 pesos. The death benefit payable to his beneficiaries will amount to 450,000 pesos. A policy or claim may be contested by a life insurance company. This is stated in the incontestability clause. The incontestability clause states that the policy and any claims can be contested by the insurance company on the grounds of material misrepresentation or material concealment within 2 years from the date the policy was issued or reinstated. Material misrepresentation or material concealment refers to information or statements that are altered or withheld so that the policy may be approved. It is material if the decision of the insurer would have changed had it been declared and known. In case that reasonable proof was established, the insurer is only liable to pay premiums paid by the insured. However, after 2 years, the policy will be incontestable, and the insurer can no longer question the policy or any claims and would have to pay the full face amount. Suicide clause states that if the insured commits suicide within 2 years from the date the policy was issued or reinstated, the company's liability is limited to a return of all premiums paid. However, if the insured committed suicide after 2 years, then the insurer is liable to pay the full face amount.
How will my beneficiaries receive the benefits of my plan?
There are several options on how benefits may be paid to your beneficiaries. You may choose lump sum, wherein the total face amount specified in the policy is given. The interest option arrangement, on the other hand, pays out interest of the proceeds that is left with the company. You may also choose an arrangement whereby proceeds plus interest earned will be paid in installments for a specified number of years. Or choose a fixed amount option, wherein installments of equal amount are paid to the beneficiary until the proceeds and interest are exhausted. Another option is the life income, where proceeds and interest are paid to the beneficiary while living. Which option would you prefer?
I think I would like to have the lump sum payment for my beneficiaries. What will happen to my policy if I stop paying premiums?
If your policy has earned cash values, you can choose to apply any of the non-forfeiture options. Otherwise, your policy will lapse. A policy lapses because of non-payment of premiums. An existing loan has not been paid, and the amount plus interest has exceeded the cash value of the policy, or if a client does not give importance to his policy. The truth about lapsed policies. Agents may have failed to remind their clients to pay premiums. Agents loses all future commissions on renewal premiums. Agents are deprived of bonus opportunities. Agents may lose their license. Agents lose a valuable source of prospects. Clients may not buy again from the agent. Clients loses the right to pay for today's insurance at yesterday's price. Clients may experience financial loss. Clients will never realize their promise to their families. Clients deny their dependents of having a comfortable lifestyle. I'm sure you would want your beneficiaries to receive the benefits of your plan. The non-forfeiture option takes effect after the grace period. It allows the insured to save the policy from lapsing in case of premium default. This may only be applied if there are cash values and/or dividends earned. The insured may surrender his policy for its cash values. Cash values may be used to conserve the policy by buying a paid-up insurance. This insurance will have a lower face amount than the original, but with the same coverage period. Another option is the extended term insurance, where cash values will be used to buy a term insurance with the same face amount, but for a shorter period of coverage. If there are remaining cash values at the end of the coverage period, it will be given as pure endowment to the insured. We want to make sure that the benefits of the plan will be realized for you and your family, and we can only do this if your policy is kept in force. The reinstatement provision allows the insured to revive a lapsed policy, provided that it has not lapsed for more than 3 years. There are also several conditions that must be met. The policy has not been surrendered for cash or converted to extended term insurance which has expired. Satisfactory proof of insurability is given to the insurer. Payment of overdue premiums or loans plus interest. In reinstating the policy, there are 2 methods used by a life insurance company. Back premium method. The back premium is a method wherein all accrued premium plus overdue interest and current premium must be paid to maintain the original policy effective date. Redating method. The other option is the redating method, where the policy effective date is adjusted to a later date. The insured need not pay back premiums, only the difference in premium because of the change in effective date and age.
I feel secured now that you have shown me what my policy can do for me and my dependents.